Welcome back. You're watching Stock Picks. Today we look into some construction players that have boomed ahead of government's infrastructure spending plans, with a particular focus on Raubex and Stefanutti Stocks. Joining us with that analysis is Anthony Clark from Small Talk Daily Research. Anthony, always a pleasure. Good afternoon.
Good afternoon from sunny Cape Town.
Yes, for a change, actually. That is for a change. Anthony, thank you for being with us today. Post this GNU emerging, and I think it's come together quite successfully, quite neatly. There is renewed hope about South African infrastructure spend. Please speak to us about that.
Yeah, it's a great question. As we discussed, before we organised this interview, the construction sector has been on a tear year to date, and I think it's completely accelerated in the anticipation of a fairly good election, which we now know occurred with a government of national unity. And since the GNU has actually been constituted, the construction sector has run ahead as if it's actually running in the 100-meter race at the Olympics in Paris. Certain stocks have run very, very, very hard, perhaps in anticipation that the GNU will start acting on President Ramaphosa's policies of wanting to spend significantly on infrastructure in this country. And I think many of your listeners will know that infrastructure in this country, from electricity, water, roads, ports, railway stations, hospitals, schools, everything needs to be upgraded. The question is, does the country actually have the money to spend the hundreds of billions, if not trillions of rands needed to upgrade infrastructure? And if it does have money, which companies will potentially benefit? Because the last construction boom in this country was pre the Soccer World Cup, which ended in 2010. And from 2005 to 2009, there was an unprecedented multi-billion rand spending spree on the Soccer World Cup, which after the Soccer World Cup ended, many companies, as we all know, either went bust or just basically trod sideways for the best part of 20 years. And we can delve into some of the companies in the rest of the segment, but it's always boom or bust in construction. It's never consistent. Right now, the market is hoping for more boom, but the trouble is, will it be bust after the recent batch of good news is over?
That is something, obviously, to be very wary of as we speak of these counters. Anthony, I'm actually keen to get into some of the stocks. I think we've got some traditional players that we've seen around for a long time in this sector. Hardly any new entrants. Does that speak of the fact that the sector has really battled to gain any ground over the last decade or so?
Yeah, that's a great question on history. In the 2005s to 2010s, there were dozens and dozens of listings in the construction and material space, as everyone jumped to the bandwagon to list their companies on the JSE to capitalize on the infrastructure boom. And companies that have been and gone, name some of your listeners may or may not remember, like Basil Reed, Buildmax, Group 5, Protec Kutele, Diesel Power, Infrasource, basically came and went. Other companies like Brickcore and WG Wern struggle on as penny stocks 20 years later. And other companies like Avenge and even Murray & Roberts, to a certain degree, are shadows of their former self, as there's been a lack of work in the domestic marketplace. And the companies who are operating domestically expanded internationally into Africa and into Australia. And as we all know, many South African companies that tend to expand overseas generally come back to this country, tail between their legs, having lost an unmitigated fortune. And even the best of the sector, which is Wilson Bailey, recently called in quits and moved back from Australia. Murray & Roberts basically saw their boots in Australia, amongst other companies working in Africa too. So as it stands right now, there are only a handful of companies directly listed on the JSE, which could be perceived to be construction companies. And interestingly, the largest market capitalization is Wilson Bailey Homes, at 12.7 billion rand. And even Murray & Roberts, which in the day was an Aussie 40 stock, is now only worth 1.36 billion rand.
Wow.
And even PPC, which at one point its market value was in the tens of billions. As of today, its market value is just 6 billion rand, showing you the value destruction in the construction sector purely in the last 20 years because of either poor investment and capital allocation, expansion into offshore markets which have gone terribly wrong, or quite frankly, a significant lack of government infrastructure spend, and as such, there's no work for domestic builders. Hopefully that'll change the GNU.
Really hoping so too, Anthony. I'd like us to maybe look at the stock. Let's take a look at Marion Roberts. Certainly used to be one of what we used to call the big five. I think it was at some point here. Like you've mentioned, a shadow of itself. It's been to Australia. I think it's still in Australia, not having the best time there either.
No, Marion Roberts, as it stands right now, is the best performing traditional construction sector year to date in the JSE. As I updated my price list before coming on air, it's trading at R3.20, so a 52-week high, yet another 52-week high. It's up 117% year to date, but its market value is only 1.36 billion rand. You could have bought this stock back in November last year at 66 cents a share. At that stage, the company many thought would go bust. It was trying to restructure itself after a disastrous foray internationally into other parts of construction Africa. And there were significant risks to the company. In the last few months, the company has hopefully tightened its belt, repaid debt, and restructured its operations to focus on areas where it has a great competency. And as such, the company we see today, compared to one that I covered 25 years ago, when the Marion Roberts name was synonymous with every single major construction stock or construction project in this country, from roads, airports, soccer stadiums, etc., the name Marion Roberts was there. Now, basically, it's become a small cap. And there is a significant lack of government works. It's not that the government doesn't have the ability to actually issue tenders, but just isn't the competency inside government to actually authorize the tenders and manage them. As the Raubex roads division told me in a site visit recently, Anthony Sandrell, which is a national roads company, has plenty of money, but they simply do not have a competency to issue these tenders and as such get works doing. And that's the issue. The government needs to bring in expertise to actually assist in getting works out and tenders issued. If that does occur, there could be a boom time ahead for domestic construction companies. Marion Roberts is well placed, but I think there are many others, given their scale and balance sheets, who would do better in the medium term.
Also interesting, I think, here, of course, is to look at the diversification. At some point, we started to speak about Marion Roberts, synonymous with some mining activity, I think. Let's talk about that, Anthony, and how the mining sector, whatever they were doing there, how that's received the company, and if they've managed to eke out some value from that move.
Yes, well, they had a company called Cementation. For many, many years was quite successful. But again, to go back to the old story, and I don't mean to keep, turning the wheel on the organ, but we all know in this country for 20 years, there's been a lack of significant investment in the domestic mining landscape. No material new mines have been planned. No deep level shafts have needed to be constructed. And as such, companies involved in that area had to look offshore in other jurisdictions to generate work. And as we all know, the underlying margins involved in these material contracts tend to be razor thin, in many cases in low single digits. And if anything goes wrong, in terms of the scope of a contract, the renegotiation of a contract, something that goes wrong, a delay, a scope change, if there is any delays in the payment or the stage payments of any major contract, it can basically hit the company's working capital extremely hard. And if you're dealing with a company on razor thin margins, you start looking very ropey when it comes to your cash flow. And that's what's basically happened to many of these large companies like Avenge and Marion Roberts, where contracts go against them. There are varying penalties which you have to pay for. The companies don't pay them on time, and they have a cash crunch. And as such, they basically go belly up. And that's what's basically happened with many of these companies, which are only now beginning to claw themselves back on. So diversification seemed to be a good idea back at a time when the domestic economy was not performing well. But in hindsight, they had no choice but to do it to remain in business. But again, as I said, if we could look in the crystal ball, moving offshore in every single case has not been a great idea. The only company which has done reasonably well, but it's a small proportion of their business, is Raubex. Operates in the Western Australian infrastructure market, but it's a tiny proportion of their business, and that's been niche but remaining profitable. If you go big offshore in construction, you generally end up with big losses.
Let's talk about Raubex. Of course, they seem to actually be doing okay based on some tenders that come from Sandrell. But it also does, have me asking here, Anthony, do they have a client risk issue?
Yeah, it's a great question. Raubex, as we stand right now, is one of the probably the third largest construction company in order. If you would include it, Wilson Bailey would be first at 12.7 billion, Afrimat number two at 11.1. Then you've got Raubex at 8.2 billion. Then the tail falls off very, very quickly down into what I call the billion rands. So you've only really got three big companies. Raubex has been known since it listed in 2007 as the country's premier road builder. It came out of a free state and it has a 50-year track record of building roads very successfully. As it stands, it's been fairly profitable for quite some time. Its current market value is 8.2 billion, and its recent revenue was nearly 18 billion rand, with an 840 million rand profit, and its current P is 10.4. Saying that, this stock has nearly doubled year to date. You could have bought this stock late last year, 25 rand. Today it's at 45 rand 88. Year to date, up just under 70%. So to hark back to my initial commentary, many of these stocks have run in significant anticipation of significant awards being made by government. To date, there has been no material orders. Lots of promise, lots of talk, lots of policy statements. So the market is running these stocks ahead, hoping that large awards will come from government. If they don't come in the next few months, I would be quite concerned that all of this euphoria might start to unwind. But in Raubex's case, there was a site visit which I attended about a month ago, and they specifically mentioned that Sanral has got 40% of last year's budget left over, and there is significant scope for new roadworks. And I want to give you a direct quote from the managing director of building. He said, "Anthony, in the last 6 months, we have tendered for more road projects in that 6 months than we as a company have tendered for in the entirety of the last 6 years."
Sure.
Showing the scope of work out there if Sanral can actually get the tenders out into the market for adjudication and awarding. That's the issue, the bottleneck in government.
It's interesting here, of course, because it looks like government, Anthony, is the cure and the cause of what we might have to see emerging here. But I think another interesting thing about Raubex, though, is the fact that I guess, when we do see that boom, there'll be one of those companies that isn't coming off a back foot. Some momentum are already kind of going for them. And I think that's been very exciting. We've seen them do work with the Bait Bridge, so on borders on the African continent. I'm keen to get just more insights on that part of the business as well.
Yeah, they have a substantial order book. So beyond no doubt that despite the rise in the share price, they have a material order book running, I think from memory, of around 15 to 20 billion rand, which is probably about a year and a half worth of orders. But any construction company is only as good as the new tenders it wins to replace the contracts that they're working on. So at any one point in time, Raubex says they're working on around 500 million rands worth of work a week, which is a substantial amount of money. So in their case, as you mentioned, they've done a lot of PPP works in terms of bait bridges, the toll roads, etc., etc. So as government looks to partner with the private sector to assist in the development of certain infrastructure projects, be it on the rail, be it on the ports, etc., companies like Raubex, which have a successful track record of partnering with government in the past, should be well placed. And interestingly, because they have a very strong balance sheet and a substantial track record, and of course the BEE credentials, they're very well placed to cherry pick the contracts going forward, because they know that whilst the other companies may scrabble to get contracts, they can stand back knowing there's plenty of work out there and they can decide what they want to do at the better margins. So to me, going forward, Raubex, despite the run in the share price, sometimes bigger is best in construction because you need the balance sheet, the expertise, and the execution to get a project going. So whilst the market has run up Murray & Roberts 117% year to date, it's still now a small company, and there's still execution risk because they do not have a balance sheet to actually take on substantial works. And if they do get large orders, the market may question, what if something goes wrong? Will the balance sheet actually cope? So sometimes in this environment, bigger is better, which is why I think Wilson Bailey, Raubex, and to a certain degree Afrimat in the provision of materials should do a lot better than the smaller construction companies, although all companies should do well if the GNU starts spending.
And then a company like Stefanutti Stocks, where does that fit into the greater scheme of things?
Yeah, again, an illustrious name from the past.
Yeah.
Those with long memories will realize that Stefanutti Stocks back in the day, all the major projects in Gauteng were constructed by Stefanutti Stocks. The Michelangelo Tower, for example, the Michelangelo Square, the Convention Center, they were all constructed by Stefanutti Stocks. But again, when all the construction sector fell in a heap, post 2010 and around 2010, 2015, 2020, the share price basically went down to a penny stock. Year to date, Stefanutti Stocks, interestingly, it's up 112%. It's trading at 2 Rand 67, but its market value is only 508 million Rand. It can be considered not a small cap stock. A matter of months ago, it was basically a penny stock, showing you that a transformation of a company and the hope that infrastructure spend will come back to this country in a better feel-good environment with interest rates declining, will see a rise once again in the commercial sector. So in Stefanutti's case, it's not more about construction, it's more about a feel-good factor returning to the commercial sector on interest rates falling and a better economic environment. But as I said, its market value is only 508 million Rand. Stefanutti back in the day was a multi-billion Rand business. So most of these traditional, well-known names are now basically less than a tenth of the size they were back, in 2010 or in 2000, showing you how far the sector has basically fallen.
Interesting indeed, Anthony. It's all we have time for today, but I think certainly getting a good a feel of these stocks with Afrimet, Raubex, and WBHO as the favorites, you say.
Yes, I'd stick to what you know. Bigger is sometimes better because of a balance sheet.
Brilliant, Anthony. Thank you so much for taking us through Stock Picks this afternoon. Always a pleasure chatting to you. That was Small Talk Daily Research's Anthony Clark.